Greetings to you all. My name is Chris Ostrowski. I'm the Managing Director of the Digital Monetary Institute here at OMFIF. Thank you for joining us for this panel discussion today on the distributed ledger technology and the future of public blockchains. The OMFIF Digital Monetary Institute is a membership organisation. We have a number of private sector members, and we're fortunate to count almost all the central banks as part of the OMFIF community. This public-private forum has been invaluable for central banks in 2021, as CBDCs and the digitalisation of financial assets have become such important topics. At our inaugural DMI symposium last month, 115 central banks participated. Today's topic on the distributed ledger technology, DLT, has been much covered this year, especially as central banks and other market participants have looked at the options available as they've started to consider whether a wholesale or retail CBDC is something that they might like to pursue in the future. OMFIF will issue a public paper containing the content of these discussions in June, so please look out for that when we publish that on our website next month. We have 4 panelists with us today with a rich experience of the DLT, and we're going to do things a little bit differently because I want all of you at home to be ready to take part in this panel from the very beginning. But before I do that, I'm going to ask the panelists to introduce themselves just by saying their name, their job title, and where they work. And I'll start with you, Hugh, if I may.
Hello, everybody. My name is Hugh McMillan. I'm the founder and Chief Innovation Officer of Instimesh.
Thank you. And Scott?
Good day, everyone. I'm Scott Hendry, Senior Director of Financial Technology for the Bank of Canada.
And Jessica?
Hi, everyone. I'm Jessica Padilla. I'm a Technological Innovation Director in the Vivienda Bank in Colombia.
Thank you. And Pietro?
Pietro Grassano, Business Solutions Director, Europe for Algorand.
Thank you all very much. Now, as promised, I want you all sitting at home or in your work office to be ready to take part in this very important poll that we have coming up right now. So we're going to have 3 questions that are going to appear on the right-hand side of the screen as you look, if you're watching on the OMFIF live site, in sequential order. It's going to be a bit of fun, but what we're going to do is we're not going to tell you what the answers are now or quote the results. We're going to collect them about 15 minutes before the end of the discussion and use them as discussion points. But the first question, which multilateral organization recently issued a bond on a public network? Was it the World Bank, the European Investment Bank, or the Asian Development Bank? Please submit your answers by clicking on the right-hand side on the Slido function as you can see it. And now moving on to the second question. When was blockchain first officially used in a wholesale financial transaction? 2016, 2010, or do you think that blockchain has not yet been used for a wholesale financial transaction? And now on to the third question. Which smartphone operating system uses an open source protocol to write underlying code? Is it Windows 10? Is it iOS? Or is it the Android? So please vote now. And what we're going to do is we're going to present the answers about 15 minutes before the end of this discussion, if we may. So thank you very much for that. So I can see we've had a lot of responses. So this is going to be quite interesting to see what people think. And the reason why we're asking these questions is we're, I suppose, measuring the sentiment and perception of blockchain and public blockchain in particular with some of the market participants in the public sector and also the private sector participants as well. I'm going to ask our panelists to tell us a little bit about their experience of using the distributed ledger technology, its features, what they have liked about it, and we'll have an open discussion for the next 40 minutes or so about that before looking at the polling answers. If you wish to ask questions, please feel free to type questions in the chat box. Feel free to ask if you have a particular question for a particular panelist. Please type that, or if it's for all panelists, then I can address it to all panelists. My colleagues who are helping me run this session will feed the questions to me as we're going along. But Hugh, if I could turn to you first, please tell us about your experience at Instamatch from using a public blockchain. And then just tell us how this has changed your operating model and what you do.
Okay, so Instamatch was founded in 2017, primarily in the unsecured money market space, to give a bit of clarity into this opaque market. And we started off experimenting firstly with the R3 Corda, which is a permissioned blockchain. And then as we produce another platform, which is Munix, which is for the public sector in the UK specifically, all with a Sterling-based payment system behind it. We decided to start looking at Algorand due to its high transaction capabilities and its security, to develop a settlement system for GBP specifically within this community. So it's so far been very, very interesting to see the differences between a permission blockchain and the public one. Obviously, someone like Algorand can process thousands of transactions a second, which is ideal for settlements.
Okay, and so I mean, in terms of the difference between the permissioned and the permissionless system, is it the speed of transactions that you notice the most? How has it changed the experience of your customers? I mean, if you take that Munich example of public authorities, local councils, how has their experience of using your platform changed by using a public permissionless blockchain?
I mean, it's actually still in development, but we've been running experiments with it. So I think they actually won't notice any difference in the way that they use it. But it'll certainly make the instantaneous payments possible, whereas previously there was T+1 or T+2 type payments.
Okay, so it's the speed and the instantaneous settlement that you've noticed as the main sort of difference here in terms of the specific benefits and the specific changes that you've been looking for.
Correct.
Okay, thank you very much. We'll come on to that in a minute, because it'll be interesting to see sort of how much the customer, the end user, needs to know about that or should know about that. But I'll come back to that in a minute. Scott, I mean, the Bank of Canada has done much research into CBDCs and the distributed ledger technology. When a central bank is asking, is assessing the pros and cons, asking all the questions in a due diligence process regarding blockchain technology, what are the most important factors in a central bank's decision making?
Well, there's quite a wide range of factors that need to be considered when considering the pros and cons. But basically, what it comes down to is it a better system, or why is it supposedly a better system? Is it there's a lot of hype around blockchain and public systems. So is it as efficient as it's supposed to be? Does it provide the higher level of security or the throughput that it does is promises? So can it really deliver on these things? Does it have proper governance and accountability so that risk can be managed in an appropriate way? So if we're looking at these things to be provide systemically important services to the economy, it's a high bar that must be surpassed in order to satisfy authorities that it can actually deliver on the promise that it's supposed to have. So we really have to look closely to fully understand what it does, how it does it, and how it's going to function under all sorts of different circumstances. So we can understand that financial stability can be assured if we have systemically important financial markets or financial transactions transiting through the system.
And based on what you have seen of public blockchains and of permissionless systems, do you think that the high bar can be met, or do you think there are innate features that mean that central banks won't be able to allow it to pass the sorts of tests that you're describing?
I still think that's a very open question. And central banks are or authorities are trying to keep an open mind to consider the possibility of alternative technologies. I think there's still a lot of proof that needs to be delivered that it can actually service in a way that would satisfy the high requirements. It's possible. It's still, uncertain to me. I tend to be in the more skeptical camp that you can have a truly open system that's permissionless and still have the level of security that it's going to function under all circumstances that's required. It's still not clear to me that we can have something that's fully incentive compatible in a way that manages macro financial risk.
And is some of the barrier the fact that it is a public thing in and of itself? Is one of these one of the barriers also a slightly psychological barrier? I mean, obviously you can apply academic rigor to these tests, but is it also that I suppose that the fear of loss of control, a kind of less easy to define fear out there about public networks, permissionless networks in particular, that is causing something of a barrier in adopting these things, or central banks considering them?
Yeah, I think that is a big factor. There has to be good, solid governance and accountability for the operation of the system. And if you look at the principles for financial market infrastructure that come out of the BIS, I think it's principle number 2 talks about the quality of the governance structure for the financial market infrastructure. So if you look at something like Bitcoin, I know that's not the only version of a public permissionless system, but if you think of something like that, no one is accountable. So how can there be good governance? They have trouble making simple software updates. The system has forked several times because of disputes in the group that's governing. It's supposed to be widely governed, but at the same time, we know very well that just a few personalities control a lot of what goes on. So it's not clear that it's truly open governance, and it's not clear at all who's accountable. So we need to make sure we understand who's involved in our systemically important systems. I can't imagine trying to spin up a system when there are certain countries decide to offer mining services to my DLT, like North Korea.
Yeah.
How about Al-Qaeda payment services or something like that? There's various groups that obviously we could not have offering services. And then another thing is, what if I spin up a system and then the price of Bitcoin shoots up to, I don't know, $64,000 US a shot, and all my miners suddenly leave because they can earn more money over there? That doesn't leave me with a very resilient system.
Sure. And what kind of
assurance?
Well, and in those circumstances, as you describe it, you can see why central banks would have such a high degree of caution, particularly when the direct comparison there with Bitcoin is one which you make a very valid point over. In terms of the area of most concern, it sounds like the area of most concern is the governance itself, how it's governed. Is that a fair analysis?
Well, there's still, to me, a lot of concerns. Like, I know that Hugh was mentioning it. You can make systems scalable. Bitcoin, of course, is not scalable, but there's other versions that can get around that. So we just have to make sure that it can actually service the needs of the users. And to me, under many circumstances, we still need to prove that it truly is a better system. It's just an alternative technology for the most part. It still has to prove that it's actually a better way of doing things. And beating the current system is actually a fairly low bar. Most countries are trying to improve and working hard to improve their current payments infrastructure or financial market infrastructure so that we can get away from that T+2 that Hugh was mentioning. So beating the current system is not really what we want to think about. We want to think about the upgraded systems that are going to be in place within the next few years.
Thank you. So I'll just turn back to Hugh now. I mean, there's a high degree of caution there. In terms of how, if one of your customers were to ask you, well, you're using an open system to, instant match this form of fundraising, how would you respond to those sorts of concerns from if they were put to you?
I mean, it depends on what we're doing. within the system. So for instance, with Art Recorder, we're using that only as a recording device for the life cycle of a transaction. So that's ideal to log everything. And then if it's something like the settlements story I mentioned before, I think, correct me if I'm wrong, Pietro, but there's over 100 nodes available within the Algorand system.
Actually, 1,500.
Okay. But within universities, etc., and bona fide sort of institutions that are running those nodes, correct?
Absolutely.
Sure.
Anyone can run a node. Yeah.
Yeah, so that it's interesting because that's a kind of source of reassurance from Hugh's point of view. More nodes, less points of failure, and so on. But when you hear sort of Scott's fear around governance, then more nodes doesn't necessarily mean better governance. It could mean less effective governance in the way that Hugh was describing. So Pietro, tell us a little bit about how you have got here. I mean, Algorand's public blockchain is used by a few market participants already. I mean, when you consider what central banks are thinking about when they're considering wholesale settlement solutions, when they're considering central bank digital currencies, what can a blockchain, a public permissionless blockchain, offer a public institution, an official institution, which are unique?
Sure. Well, first of all, if you allow me, I will take the question on the other way around. I will add one worry to the considerations that Scott was making.
Okay.
And it's the one of sovereignty, right?
Mm.
So as a central bank, you don't want to be pegged to someone else's coin. And therefore, most probably, a public blockchain is not the way to create what has to be a legal tender with perfect sovereignty from the standpoint of a sovereign institution like a central bank is normally, right? Mm-hmm. So if you allow me with that, I'm just gonna detach a little bit the debate from the black and white kind of logic. So private permission versus public permissionless, because there are situations for any infrastructure, and blockchain and payment infrastructure make no difference, where you need part of the infrastructure to be public and part of the infrastructure to be private. I mean, a road is a road. It allows to bring people and goods from point A to point B. And we will ask ourselves only in a second moment if that road is to be a public road, a national road, a motorway, a toll road, or a private road in order to go in specific neighborhoods, right? So I would like to say that as Algorand, we tend to be pretty, if you want, neutral around the choices that private market participants or public authorities want to do, because they have different type of needs around the same infrastructure. What we are seeing is that in our interactions with central banks, the fact of, putting in front of them the logic of the public permissionless blockchain brings up a couple of problems. One is, okay, what about the governance? If North Korea runs a node, well, can we really rely on that specific consensus mechanism? And the second one is about sovereignty. We don't want to be pegged to, the algo as the coin of the public mainnet of Algorand, because we want to be the issuer of the legal tender, right? It's the role of the central bank. And therefore, all considerations tend to be more in the field of, okay, let's think about a private instance where the country central bank can decide who the nodes are, where the stake, we are a proof of stake blockchain, no? So how the consensus can work, and therefore then have an element of decentralization which is related to the participation of the financial system of the country and potentially of the citizens of the country, which make of it a pretty decentralized type of situation, still remaining in the field of private permission type of logic. We can accommodate it with private instances of algorithm. At the same time, let me say private companies want to have the ability to issue, for instance, electronic money via the utilization of, in the European Union, the e-money directive on a superior infrastructure in terms of a lack of single point of failure like a blockchain can be. And this related to specific features of scalability, decentralization, and cryptographic security. Therefore, it's interesting because you have the private that tend to go on the public, and you have, let me say, the public, the public authorities that tend to go in favor of private instances. My personal take here is that the two can coexist, and actually the two can potentially coexist for good because they want to address different type of problems.
And what's your response to that, Scott? I mean, so here, Pietro is saying his particular public blockchain technology can supply some of the benefits that is innate within that public technology on a system that an actor like a central bank needs to meet some of those tests you described. Does that just make the tests more complicated, or is this something that allows you to see a way forward? What's your reaction to Pietro's hypothesis there?
Yeah, it certainly makes things more complicated. That doesn't mean that it's impossible to find a way forward. These things just need to be investigated and experimented with, so we understand how they operate, and that the authorities can understand how they function under different circumstances. So we know that risks are properly managed. We know that they can't be exploited, that they will serve as resilient services, and that they can meet the needs of the users. The future can easily be a selection of different technologies to serve different use cases. I think that's going to get us to a better, more efficient, more resilient financial services sector in the future, as we have different technologies applied to different use cases that they're each appropriate for.
Thank you very much, Scott. And I mean, from your point of view, Pietro, I mean, what do you see as the most logical next step? Central banks have very rigorous requirements in terms of what they're looking for. I mean, is it perhaps more likely that some sort of stable coin or commercial money will be on a public part of a blockchain as the most likely next step? If you have stable coins, which some central banks have said they're happy to sort of be open to the development of in a way that is sort of semi-official or pegged, is that a more likely outcome than a CBDC or wholesale settlement?
No, I would say that the two things can coexist, and they do actually already coexist. I mean, we have cash and we have commercial bank money. One is the liability of the central bank, and the other one is a byproduct of it, right? There is already a set of regulations, for instance, again, the e-money directive in the Eurozone that provided that the issuer has a specific KYC AML type of procedures and has specific capital requirements, then he can issue electronic money. And actually, the issuing it on a blockchain is just a new technology where this can happen. So, yeah, I think that the coexistence can absolutely happen, as long as we know that CBDC is something. It's a legal tender, is potentially a liability of the central bank, and actually commercial money is something different, right? So I would say that the coexistence just mirrors, probably with an announcement of the features. I'm absolutely in agreement with Scott that there are lots of ways that the current system is improving its latency and so on. But I think that the blockchain world is doing a lot of pressure, if you want, right, to improve and have the various real-time gross settlement systems being involved. So to me, the two things will coexist as they are coexisting as of today.
So, I mean, it sounds like you kind of accept the main. Sorry, go ahead.
No, sorry, if I may.
Sure.
What I don't think is going to be particularly sensible is the logic of the famous global stable coins, right? Which are essentially private market logics that tend to take away from central bank that monetary sovereignty we were talking about before. This will not be accepted by the central bank system by definition, right? Because it just cuts out the level of legitimacy that the central banking system has.
Agreed. And we have seen probably a step back from that, certainly since the end of 2019. And we've seen that the kind of recalibrated stablecoin idea has been far more closely pegged to something which would be at least recognized, a stablecoin, recognized or pegged to some sort of sovereign issued currency. I mean, it sounds to me, Pietro, like you kind of accept the rigorous tests of the central banks. You accept why they have to have it. You accept that a central bank digital currency has to have these distinct features that only they can have. But it sounds like you're also looking for something from central banks, an announcement, a nod, a push, perhaps. Something to just move it forward. So what is that thing you're looking for if you accept that all Scott's points about his tests and so on?
Oh, to participate to the tests, as we are doing in some jurisdictions and so on. So we are more than happy to open up our book of how the public mainnet of Algorand works, what the consensus mechanism can bring to a private permissioned version of Algorand.
Thank you very much. Jessica, thank you so much for your patience. So tell us a little bit about what Banco da Vivienda has been doing. I mean, this is a retail bank using a public blockchain system. Tell us a little bit about it and the difference that technology has made in Colombia.
So I need to say that we start to understand blockchain technology since 2016. In that moment, we just have available public blockchain. We start to understand the first version of Ethereum, and we also test some tools from Bitcoin. In that moment, our first goal was understand how blockchain works and how we can adapt blockchain benefits for a very regulated business or sector like banking. Times goes and now we have more options in the table, and we can now understand the real benefits of private blockchains. I think, for example, the proposal of Algorand is very functional for banks, for their characteristics. And here in Colombia, we have more than 12 projects based on blockchain. And recently, we can prove with real facts that blockchain works for financial industry and in particular for banks.
Okay, so tell us a little bit more about that. I mean, you heard Scott describe the kind of the sense of rigorous analysis that's required for public money and the issuance of public money. But as a retail bank with commercial money, how did you approach the risk analysis when adopting and considering this type of technology?
We have a very close relationship with the risk area in the bank, and we start to understand how blockchain works, and then how adapt the risk management with this new technology. So in this moment in our bank, the risk area understand the benefits for traceability, security that blockchain offers. It's it's a work that we have together, innovation teams and also risk teams. And we are working in order to make a merge between both worlds, the traditional worlds and new worlds, using the best of both worlds.
Thank you. Thank you, Jessica. And in terms of your actual customers, the retail, the people who use Banco de Vivienda as their bank, how did you communicate this type of thing with them? Do customers ask? Do they need to know about this technology? Is the technology important to them in terms of the communication of how it's used?
I think that for now, blockchain is still a very complex concept. So for now, our clients are not asking us about the technology. We are working in a very close ecosystem in order to understand the technology. In fact, our projects are being tested in friends and family groups, because we need to be sure that this work before offer products based on blockchain for the customers, for the whole customers that we have for now. But recently in Colombia, the government announced a sandbox for proof crypto in this country. For now, this is an activity that is forbidden in Colombia. And when the government announced this sandbox, customer was very interesting on understand how that works. We make an alliance with Binance, and we receive a lot of questions about when people can access to this new product in Colombia. I think that this is very interesting phenomenon, because people is very curious about crypto more than blockchain-like technology. That is
it's certainly true that the news of Bitcoin in the last few weeks has been one of the things that's that we've seen a lot of, and that generates more interest with the public than the underlying technology itself. But in terms of the specific differences between a private blockchain and a public blockchain, can you just talk a little bit about that, about what difference you've seen in this test that you're running, and what the particular elements were that made the public element of the blockchain that you're using appealing?
I think that the main point is that in private blockchains, we can make sure more securities capabilities. When you are talking about activities directly related with bank sectors. I think that this is the most important feature that the private blockchains offer us. I think that we can use public blockchains for make a lot of use cases that could be work.
Thank you very much. And I mean, from your point of view, Hugh, if we look at some of this image and publicity around Bitcoin, there's some negative publicity and that sort of thing. I mean, do you see there being any sort of barriers to other companies adopting this sort of technology? Are there any sort of other risks around the sort of publicity or a collapse of Bitcoin or anything like that that could cause an organization like yours to I suppose reconsider using a public blockchain?
I don't think so. I think particularly in Switzerland, we're very advanced also in the regulation side around the digital asset space, etc. And I mean, we only have institutional treasuries on our platform. And one product that we have, which is it's a collaboration with a company called FQX. We've created an e-note, so a promissory note, where the whole of the legal structure is enforceable within 165 countries, and that goes onto the Swiss the Swiss Trust chain, which is a collaboration between the Swisscom and the Swiss Post here. So that's like investment grade. Everyone feels comfortable in Switzerland using that type of technology. And I think whatever happens in the crypto is almost like a parallel universe.
Okay, so that's quite an interesting distinction there. What we're going to do now is we're just going to have a quick look at the results of the quiz that we had, just to see how people think about and how people view these issues. So the first question was, which multilateral organization recently issued a bond on a public network? Now the answer is the European Investment Bank. So as you can see there, we have a very well-educated and well-informed audience, because 69% of people, actually it's changing as we speak indeed, but that shows that having said what the answer is now, I can now see more people voting, but we can certainly see that that's the correct answer there. Pietro, tell us a little bit about that. I know this is one of the ones. This is one of the events, one of the issuances that you watch closely. The European Investment Bank decided to do that.
Absolutely, European Investment Bank, together with a couple of continental European banks and a US bank, has been issuing a zero coupon bond on the public Ethereum blockchain, and by the way, settling it with a CBDC that had been done on Ethereum by Banque de France. So it was an interesting example, sort of an experiment that, again, let me say, the traffic on the public motorway system can be somehow regulated as well, right? Albeit the public motorway system is not necessarily a centralized type of infrastructure.
Okay, thank you very much. Now let's see the poll results from the second question. The second question is, when was blockchain first officially used in a wholesale financial transaction? So let's bring the results up. And so, yes, about half the people thought that the answer was 2016, and 2016 is the correct answer. We had Project Jasper in March 2016, and also Project Ubin, which was a experiment which MAS were undertaking in November 2016. So we can see there that when we say officially, we really mean used by central banks in part of their work, and so it has already been used as part of these projects, and so and that happened in 2016. Let's look at the final question as well. It would be interesting to see what people thought about this. So the question was, which smartphone operating system uses an open source protocol to write underlying code? Let's see what the audience think. And it is indeed Android. And again, quite a well-informed audience here, but some people are quite surprised to see and to learn that a public network is an open source code is used to underwrite code in a phone that is used every day. So, I mean, from these answers, it would probably show, in fact, that there is some understanding of how public blockchains are used. But there does also seem to be a bit of a barrier between this and it being used in some of the more official parts of the monetary sector. In terms of the sort of day-to-day examples, I mean, Pietro, if I was to ask you how we could sort of build confidence and build out understanding in this area, what would you sort of expect to see from other stakeholders in civic society so people can understand, you know, what blockchain is and how it's used?
I think that, as always, you build confidence via dialogue. There is no other way. So at a certain point, I mean, like always in history, there needs to be some sort of ability to go beyond the polarization between the Bitcoin maximalists on one end and I mean, the defensive posture of some of the institutional world on the other end, and try to actually see and think in terms of what is really the problem that this infrastructure can solve, right? For instance, I mean, thinking that with a logic of transparency that the blockchain can bring, and with some of the features the blockchain can bring, well, the counterparty risk that played such a big role in the financial crisis of 2007, 2008 can be somehow minimized. And this is something that we should think of much before asking ourselves, is it public, is it, it is systemic. So it's both public and private, right? And therefore, it's pretty normal that private market participants tend to look at this with a certain angle that the public market participants have to experiment before taking the risk of and taking the responsibility of moving from one design and one set of technologies to another one. But there is also the other responsibility, that is the one of not moving, right? So, I mean, you also make a choice without moving in one direction or the other. And some of the elements that we have already are open source, as we said, like in the case of the Android operating system. We know that probably for competitiveness, some elements of open source instead of the logics of walled garden have to be put forward. At the same time, there are things that cannot be compromised, like the logic of sovereignty, like the logic of having a sound KYC AML type of framework, and so on and so forth.
Thank you very much. So let's remove the answers now and just go back to the panel, because I know that we've also had a few other questions come in the meantime. One of the people viewing this who took part in the poll was asking about again, back to some of the things that you spoke about, Scott, central bank and governance. Might an approach to be to simply find the best way of having an improved governance system? So rather than being, the question, to read it exactly, reads like this: why are central banks negative in regard of using tokens instead of looking at better ways to implement governance? And it brings up an interesting question, because obviously, the due diligence that you described that you have to undertake is obviously very important. But the governance itself, I mean, is that something that can be looked at as a starting point when considering technology and considering the monetary system?
Absolutely. And the question about governance and due diligence is completely separate about whether or not we can use a money that's token based. Those are two completely different questions, because it could be a private permission blockchain system and be tokenized. And from our investigations, it's not even clear that there's much meaning to the term token, because you can make a token system look like an account system and an account system look like a token system. So we really have to figure out exactly what we're trying to achieve and design the best system for that use case and for those goals, and something that we can manage the risks appropriately. And that's the fundamental, is to serve our constituents in a safe manner and give an efficient financial market.
Thank you very much. And I mean, for Hugh and Jessica, for two private sector organizations who are using an open system, do you see additional advantages? I mean, I don't know what sort of KYC requirements are required in how you deal with commercial money and how you deal with your own private clients or the clients who use your systems. But do you see this as a way of enhancing and improving those particular elements that are often discussed? I mean, Hugh, you first. If you take KYC in particular, or the greater information flow that's sometimes required in deal making, does this help with that?
Yes, definitely. We're working on a project to when we onboard an institutional treasury and they want to trade with another counterparty on the platform. Normally there's Volkswagen contracts, etc., which have to be exchanged in order for them to build up a relationship with each other. So some of these are quite sensitive documents, and if we use a decent KYC system to exchange documents on a permission basis, so someone can request the key from someone else to exchange those documents, that's of great benefit to us. There's a hell of a lot of paperwork involved, and this is severely reduced.
Okay, so that's a very interesting use case that I think is worth considering a little bit further. And from your point of view, Jessica, in terms of in Colombia, who is using the money and what it's for, does the technology help with those things that banks are often required to do with their commercial operations?
I think that definitely yes. Recently, we start a very interesting job with the compliance department in the bank, and we can define a new way to make the KYC process using this kind of technology. And it's very interesting how, for example, the traceability of the tokens that are running over a blockchain network is more easy to be understood and managed when you use DLT technologies than in another or traditional ways. That's why I think that in the future, when governments and in general the society understand and find agreements around this kind of new technology proposals, we can use blockchain for improve process that we made today in a traditional way. I think that we have a lot of elements that can solve problems, historical problems, not just in the financial industry, also in another industry. I found a lot of benefit.
Thank you, Jessica. No, that's very interesting information as well. Another question that's come in from one of the viewers is, again, regarding the hybrid system that both Pietro and Scott have spoken about, the public mainnet and the private permission system. And in terms of one of the theories here is that if there is a way of limiting payments from specific groups, or if there are concerns, the central bank can kind of develop a scoring system, almost I suppose a social credit score for the users on any potential system. I mean, that itself throws up millions of other complexities. But Scott, is that one of the ways that you could consider a form of governance and checking when considering what the options are here?
Yeah, social credit systems aren't exactly something that I would want to try and get into. It's definitely not a central bank responsibility for something like that. We have a good system for KYC and AML, and it's not clear to me that part needs to change. We just need good ways of enforcing the regulations or the standards that we already have, so that we know who's participating in these systems, if that is the goal.
Would you say it works well now? I mean, money laundering and knowing who the client is. I mean, I think many people who view the global financial system would say would perhaps like a system that detects that better, wouldn't they?
Well, obviously, we would like systems that work better. It's not clear to me that a permissionless system where any user can join and be anonymous would make things better. So the one thing that's always confusing to me is, you say a public blockchain, but that can mean so many different things. Yeah. What is permissionless? Is it access that's permissionless, which is something that, in a sense, that we want because we want universal access, but at the same time, we have to be compliant with regulation, like AML and KYC. So, like, what is permissionless? Is it access for minors or something like that? Or is it access for the users? We really need to clarify what we're talking about. And it varies by the use case. The more systemically important the use case, the greater the value that's involved, the greater that we need to know about who's involved from either a user point of view or an infrastructure point of view.
Certainly. I mean, and Pietro, from your point of view, as we sort of seek to navigate the complexities here and understand and the participants understand a little bit more about what these terms mean and what we're talking about, how can those technology providers help make things clearer, so that when we're having these discussions and when we're looking to, I suppose, foster greater adoption, foster more understanding, learn a little bit more about what's possible, it's clear what we are doing and it's clear what the objectives are? How can we improve that part of the process?
I think being better in explaining what we are trying to do. So using metaphors, right? So expressing the fact that the car of the police can chase thieves better on a decentralized motorway system than on a set of smaller private roads. And this still is consistent with the mandate of the police car, right? Using metaphors, being able to bridge the meanings between different, I mean, everybody lives within the horizon of his own language. There was a philosopher in the end of Austria, in the Finnish Austria, that used to say so, right? Ludwig Wittgenstein. We need to be able to broaden a little bit the horizon of our own language. And therefore, I mean, talking about public-private, being able to understand that both features are needed in specific situations, being pretty precise on what we mean when we talk about permissionless and permissioned, what we are wanting to permission. Of course, not everybody can run on a motorway, and not everybody can run on a motorway in the way he wants. So there are speed limits, so there are age limits for a car license and so on and so forth. And this can be enforced probably without wanting to, let me say, regulate too much the technology per se, but more regulating the wallets, the uses, understanding where the KYC can be done. Is a token a better instrument? And therefore, in that case, I see the difference between the token and the account, or is it something else? So, I mean, I suspect that we need to do more of what you guys at OnFIF are trying to do, creating the dialogue opportunities.
Sure, and I think, you know, reflecting on this, I think the term public is generally well understood. Public means open for people to use. I mean, permissioned and permissionless is a little bit more complex, because permissionless generally, in the English language, certainly makes people think of the sort of anarchy of anyone being able to do anything. And that's obviously not how it's meant. I mean, permissionless is a way of describing the way in which sort of the protocol is developed and so on. Yeah. So I think there's probably, I mean, people will be able to understand the idea of you know, public freeways and why that is helpful for people to get to A to B, and that it's a public good. But that also comes with a lot of governance. I mean, motorways have a strong Absolutely. Governance structure, and how that governance structure exists and how that governance structure fits together with the concept of a single authority when it comes to market stability and so on is one of the things that I think we probably need to consider the most. I think what would be helpful now, as we've got a few minutes left, would be just to look at the final polling question that we've got, and this is one that's going to, I think, appear on the screen as we go along, and then we can have a quick discussion about that as well. So the final question to all our users, what is your preferred choice of technology when exploring the digital representation of an asset? Public blockchains, private blockchains, both, or I will not use blockchain at all? You can actually keep voting on that one as well. Okay, that's all quite helpful. We'll just keep that up for a little bit longer. I mean, in terms of any sort of final thoughts from you, Scott, I mean, it's interesting to hear you talk about how you have been able to look into this in the Bank of Canada and what you're kind of looking for. And there's obviously a rich amount of research here. But in terms of moving this to the stage where we do see these types of hybrid adoptions or anything like that, is there something that you're looking for from private participants, either the providers of technology or commercial banks such as Jessica's Bank or other sorts of organizations like Instamatch that Hugh works for? Is there anything that you're looking for from them to help you along your way with these further inquiries?
Well, I would say something along the same lines as Pietro, as good, clear communication about what is being proposed and how it's going to be managed. The thing that we've encountered most is too high a degree of hype in the marketplace, and people that are proposing things and basically assuming or starting from the point where there's no risk involved, that everything's solved. And that's simply, well, never true. That the risk management is a fundamental part of any proposal. So that if something's being proposed, we have to think about what to do if things go wrong. That's not the only perspective, of course, that we have. We need to think at the same time about how is it improving things? How is it going to work with the rest of the system? And is it going to be a functional, more efficient way of doing things? So there's many different aspects that need to be considered, but good, clear communication of what the benefits are, what the risks are, and how everything's going to be managed.
Thank you, Scott. No, that's a very clear explanation there. And Jessica and Hugh, from your point of view, I mean, we've spoken about the importance of communication, how this is understood. What do you think is a necessary degree of information for the end user with considering this type of technology? How much should you tell the end user about what the technology is and how it works? Does it not matter at all? Or is it so important and so different that the end user should know? What's your view on that, Hugh?
Well, particularly when we first started working with R3 Quarter, and our client base is mainly, or was mainly, banks at the time, they were very concerned that parts of information would be available, or possibly, even though they're encrypted, be seen by other banks. So also the GDPR concerns that always come up, it's just to try and allay those fears somehow.
Were you able to do that successfully, do you think?
I think so, yes. I mean, because R3 Quarter was sort of the standard at the time for the banking community. I think that was quite well understood in the end. And but Pietro, I think the way that Algorand handled GDPR issues is also very clever. I don't know if that's something you want to mention.
Yeah, I mean, there is an article that describes very clearly how our founder Silvio Micali has in mind to tackle the elements of the right to be forgotten, which is, the key part of GDPR that makes it complicated to, have specific sets of data on the blockchain, which by definition has to be immutable and tamper-proof. Well, not all of it. Part of it can be somehow managed by specific information management type of logic that can be implemented on any kind of blockchains, actually. So there is a specific paper from Silvio Micali that addresses that.
Certainly, if you're a European institution, you will be very familiar with GDPR, and explaining that anyway is difficult, Hugh, but it's interesting to hear how you think eventually your customers got that. And one of the GDPR, any GDPR solution is always welcome. Jessica, how important is it to explain this to your end users, to your clients?
I think that clear information about what the products we are offer works is the main point. I think that clients now is looking for transparency, security, and more important, clients are looking for trust in the companies that offer the products that they use in your daily life. I think money is a main point in the life of all of us. So I think that we need to make all of the effort that we need in order to give trust and confidence to the customers.
Thank you very much, Jessica. We do have a final question, which is, I think, the input for Pietro, but I'm actually going to answer it myself, because the question is, have central banks done enough to actually understand the blockchain technology, or are they making assumptions not rooted in reality? Now, OMFIF is a central bank think tank, and we have so many central banks who are always asking us to do more. There are so many, for me, the degree and willingness to try and understand as much as possible is certainly there in most of the central banks that I speak to. Scott works for one of the central banks that has done some of the most research. So I certainly think that it is the willingness to understand and learn more exists within the central banks. I think that what both Pietro and Scott said was most accurate when they spoke about trying to understand what blockchain technology is and what we mean by public blockchain, what we mean by a permissionless system, is one of the most important things, because it's more a psychological thing. If you think of a central bank with that single authority to protect the public as something that's so important, then anything that is described as the first stable coins were, which would smash the global system, will automatically result in central banks recoiling and running to the hills. And we have seen over the past sort of 12 to 18 months, and this is where the Digital Monetary Institute has helped, a real eagerness to learn and understand, so that the technology provision and the central bank's way of thinking can meet in such a way that there can be greater adoption where necessary, or a rejection of technologies where they're not appropriate. OMFIF is totally neutral on this. OMFIF doesn't think that blockchain technology is any better than any other technology. And some central banks and users may choose not to use any sort of blockchain at all. So I think we should end this situation, this panel, with that further thought that more of these sorts of discussions will help us as we continue to endeavor to understand more about the distributed ledger technology and public blockchains. Thank you very much for joining us today.
Thank you.
Goodbye. Thank you.
Thank you.
Bye, everybody.
Thanks, everyone.